How did Kuwait transform from a poor desert to one of the world's wealthiest nations? Imagine a barren desert land, surrounded by the relentless heat of the Arabian sun and the salty waters of the Gulf. No rivers, no forests, no gold, no fertile fields. Yet this land, Kuwait, would one day become one of the richest nations per capita in the world. How did that happen? Before oil, Kuwait's economy relied heavily on the sea. Its people were skilled sailors, traders, and pearl divers. By the late 19th and early 20th centuries, Kuwaiti merchants had carved out a reputation for maritime trade, connecting India, Africa, and Arabia. The wealth they accumulated was modest, fragile, and subject to the whims of nature and global demand for pearls. Then came 1938. That year, British geologists discovered vast reserves of crude oil beneath the Kuwaiti sands. Production began in 1946, and within a few decades, Kuwait was no longer a dusty trading post. It was a petrostate, flush with wealth, luxury, and influence. High-rise buildings replaced mud houses. Free education and healthcare became the norm. Kuwaiti citizens were no longer traders or divers. They were government employees, managers, and entrepreneurs, often supported by the state. But beneath this wealth lies a fragile reality. Kuwait's economy remains tethered to a single resource, oil. And that dependence raises one question. Can Kuwait's economic success survive the end of the oil age? Oil wealth, an endless fortune or a risky dependency? Let's talk numbers. Kuwait holds about 6% of the world's oil reserves, over 101 billion barrels. It's the sixth largest oil reserve globally and one of the top 10 exporters of crude oil. Oil accounts for 90% of government revenues, 90% of exports, and over half of the country's GDP. Essentially, Kuwait runs on oil. Oil revenue funds everything: salaries for public employees, generous subsidies for fuel, electricity, water, and even basic food items. The government provides free healthcare, free education, and low-cost housing. It's a system that's created a high standard of living, but one built on the assumption that oil money will always flow. But oil prices are volatile. In 2014, global oil prices crashed, sending shockwaves through Kuwait's economy. The country posted budget deficits for several consecutive years. Again in 2020, during the pandemic, oil prices plummeted to historic lows. Kuwait was forced to draw from its General Reserve Fund just to pay salaries. This dependence is not just risky, it's dangerous. Global shifts toward renewable energy, climate change concerns, and decarbonization efforts threaten long-term demand for oil. If the world no longer wants Kuwait's main export, what happens next? Kuwait's leadership knows this. That's why it created a plan, a financial safety net for the post-oil era. The Future Generations Fund, Kuwait's economic safety net. In 1953, even before full independence, Kuwait took a bold step. It established the Kuwait Investment Authority, KIA, a sovereign wealth fund designed to manage oil surpluses and invest them globally. Within the KIA lies the Future Generations Fund, a unique financial instrument meant to protect Kuwait's prosperity after oil runs out. By 2025, the combined value of Kuwait's sovereign wealth funds is estimated at over $800 billion, making it one of the largest in the world. These funds are invested in real estate in London, companies in Silicon Valley, and infrastructure projects across Asia and Europe. Every year, 10% of Kuwait's oil revenues are funneled into this fund, by law. The goal? To generate steady returns from global investments that can replace oil revenues in the future. It's a powerful idea. While oil is finite, investment income can, in theory, last forever. But the fund's opacity raises questions. Details about specific investments are scarce. Some citizens worry about accountability. Moreover, no matter how well the fund performs, it might never generate income equivalent to the billions earned from oil annually. Still, this fund gives Kuwait something most oil-dependent nations lack: time. Time to diversify, time to reform, and time to prepare. The private sector and economic diversification, a dream deferred? Kuwait has talked about diversifying its economy for decades. The dream is to become a financial, trade, and tourism hub, less reliant on oil, more integrated with global markets. In reality, progress has been slow. The private sector in Kuwait is underdeveloped. It contributes only about 30% of GDP, compared to over 60% in developed economies. Most Kuwaitis prefer government jobs, which are secure, well-paid, and require less competition. As a result, the private sector is dominated by foreign labor, and innovation is stifled. Entrepreneurs face numerous challenges: complex regulations, limited access to financing, and a rigid bureaucracy. Foreign investors are wary, not just because of legal hurdles, but also due to political instability. Government-led initiatives like Kuwait Vision 2035 aim to change this. Plans include major infrastructure projects, a new financial district, and efforts to develop tourism and technology sectors. But compared to neighbors like Dubai or Riyadh, Kuwait's progress feels sluggish. The problem is structural. A rentier economy, where wealth is distributed rather than created, discourages risk-taking. Without bold reforms, the private sector will continue to play second fiddle to oil. Demographics and the labor market. Who really powers Kuwait's economy? Kuwait's population stands at around 4.5 million. But here's the catch. Only about 1.5 million are Kuwaiti citizens. The rest, over 3 million, are expatriates from India, Egypt, the Philippines, Bangladesh, and other nations. These foreign workers are the backbone of Kuwait's private sector. They build the roads, serve in restaurants, clean homes, and even staff hospitals. Meanwhile, over 75% of Kuwaiti citizens work in the public sector. This creates an imbalance. The government spends billions on salaries and subsidies for its citizens while relying on cheap foreign labor for economic productivity. Youth unemployment among Kuwaitis is rising, not because there are no jobs, but because the available private sector jobs don't match expectations. Low pay, long hours, and less job security. The public sector can't absorb everyone, and this mismatch is creating pressure. The government faces a tough choice: reform the labor market or continue an unsustainable system. Efforts to Kuwaitize jobs, forcing companies to hire citizens, have seen limited success. Without real incentives for citizens to join the private sector, and reforms to make private work attractive, the demographic imbalance will persist. Politics and the economy, an uneasy relationship. Unlike most Gulf countries, Kuwait has a lively political scene. Its parliament is elected, and it has the power to pass laws, question ministers, and block government decisions. In theory, this should foster accountability and transparency. In practice, it often leads to gridlock. Political disagreements between the elected parliament and the ruling family's appointed ministers have delayed crucial economic reforms. Debates over privatization, taxes, and subsidy cuts have stalled. Frequent dissolutions of parliament and cabinet reshuffles create instability. For businesses and investors, this unpredictability is risky. Major development projects are often delayed. Foreign investment remains limited. Economic plans are frequently revised or abandoned. While political participation is a strength, it becomes a weakness when consensus is elusive. Without political stability and unified economic vision, reforms remain on hold, and the clock keeps ticking. Can Kuwait's economy survive the post-oil era? Kuwait's future hinges on a single question: what happens after oil? The country has immense wealth, a young and educated population, and strategic location. But these advantages must be harnessed. Vision 2035 lays out ambitious goals: becoming a regional financial center, boosting private sector employment, and attracting foreign investment. Projects like the Silk City and the Bubiyan Port aim to position Kuwait as a logistics hub. But ambitions require action. Bureaucracy must be reduced, regulations streamlined, youth empowered, education reformed, innovation encouraged. Global challenges are looming: renewable energy, climate change, and automation. Kuwait cannot afford to remain static while the world changes. If reforms succeed, Kuwait can build a sustainable, diversified economy. If not, even the vast wealth of the future generations fund won't be enough. A desert economy at a crossroads. Kuwait's story is one of resilience, luck, and opportunity. It turns sand into gold, literally. But now, the time for relying on oil is running out. The desert gave Kuwait its wealth. The future will depend on what Kuwait builds upon that wealth. Will it be innovation, industry, and knowledge? Or will the country be remembered as a missed opportunity? The next chapter is unwritten, and the choices made today will echo for generations.